The housing market has recently peaked, and we're about to enter the Great Deceleration with regards to real estate, house prices, and the overall housing market. In today's video, we're going to dive into what this means to you as a buyer or a seller in today's housing market. Over the past 2 years, we've seen home prices go absolutely crazy. Even in the first quarter of this year alone, we've seen double-digit appreciation in many markets out there. At the same time, we've seen interest rates rise. Even though they've started to level off a bit, this has had an effect on affordability, which has put the brakes on the craziness that we've seen with regards to real estate, the housing market, people overbidding offers. And because of that rise in rates and that rise in home prices, we've seen affordability come into play, which is causing mortgage applications to drop. At the same time, we've seen pending home sales drop. We've seen new construction, new home sales drop, all during a time when we've seen more listings come to the market, which is causing sellers to have to cut their prices. So what does all of this mean for you as a buyer or a seller in today's market? Well, I want to start by asking a favor. Before we dive into deceleration and what that means for housing, do me a favor, hit that thumbs up. Feel free to share it with a friend. It helps the YouTube algorithm, helps the video get out there and spread logical information about what's happening in housing versus all the fear-based stuff that's taken over the media. So when I say the words Great Deceleration, you probably get a little bit scared. What does that mean for housing? What does that mean for the house that I own or me as a buyer trying to buy homes? Well, let's look at the definition of what deceleration is. It means to reduce the speed of, slow down. And so what I mean by deceleration is you're likely to see a housing market move slower. We're not expecting any price declines, which we'll talk about here in just a minute because of inventory levels. But we are expecting a market to slow down. The craziness that we've seen over the last couple of years isn't going to continue, which is a good thing for buyers. Because as a buyer, it's been difficult to get your offer accepted. You've had to make multiple offers. In many cases, you've had to waive all your contingencies, go way above the asking price, just do crazy things. Well, the market that we're entering now is going to be a slower market, a market that has more options, has more property to choose from. You're going to be able to get a property for less than market value in many markets out there. And we're going to talk about some listings that I have in just a moment here and what I'm seeing on those listings to also give you some boots on the ground information about what's happening. So as a moment ago, I mentioned you're likely to see deceleration, not big price drops, right? A slowdown in appreciation. So many of the major companies out there like Zillow, CoreLogic, these guys are still expecting year over year appreciation, but they're just not seeing year over year appreciation like we've seen in the past 2 years, 15, 16, 20% in some markets. So they're expecting a slowdown. Why a slowdown? Because the existing supply of homes is still well below what we need to have a balanced market. While inventory is rising and it's looking better for buyers, it is still not a buyer's market. It is still a seller's market out there. And if you're a buyer, you're seeing this. You know this when you're out there making offers. Now, in some cases, you're able to get that property for less than market value because maybe it was overpriced to start with. Maybe there's more competition in that market. Or maybe the seller is a bit scared. There are definitely scared sellers in this market, worried that they might not be able to sell their home, and they might let it go for less than market value because they're worried about a pending housing crash or the potential of not being able to sell their home. And this is a good thing for buyers. But because existing home inventory is so low compared to where we need to be, with current inventory sitting just over 1 million active properties on the market, we're well below that 2.8, 2.9 million homes that we need on the market for a balanced market. And with that said, what effect does the low supply, high demand imbalance have on the housing market? Well, I found this article on National Mortgage Professional, and it really sums up the imbalance in detail. I don't think I could say it any better, so I'm just going to read it. Housing prices don't fall just because mortgage rates rise. Rising mortgage rates do influence house prices, but broader economic conditions are often more influential. The Federal Reserve is purposely trying to slow the housing market in order to tame inflation and early indications based on our preliminary house price index signal a normalizing housing market. History has shown that rising rates may take the steam out of rising house prices, but they don't necessarily trigger a decline. In today's housing market, demand for homes continue to outpace supply, which is keeping the pressure on home prices. So don't expect house prices to decline. Now, I know some of you are going to listen to that saying, Jeb, you're absolutely crazy. I'm already seeing price declines. Yes, you are going to see price declines. We've talked about that. But understand, where are those prices declining from? And then a lot of people want to come out and say, well, look at new home sales. That is a perfect indicator. Nobody is buying new homes. Well, you have to understand the context when you read that headline. They don't tell you, that most of those homes aren't even built. Only a small percentage of those homes are actually under construction. So the idea of somebody wanting to buy a home that isn't even built in a market where you've got inflation, you've got rising rates, you have no idea what it's going to look like when that house is actually completed in 6, 9, 12 months from now. Yeah, if I were thinking of new construction, I'd probably take a back seat too, because you don't know what the future holds on those homes. It's not like these homes are already built and no one is buying them. This has to do with new contracts being signed. And it's very important to understand that when you're talking about declines in these numbers. But with all of that said, we have seen home prices rise, and you are likely to see some price drops, some pullbacks in markets out there, right? Each market is a little bit different. Housing is local. Real estate is local. So depending on where you are, you might be in an area that is more apt to a potential pullback in home prices. This is a map right here that shows the odds of prices declining in your market. Now, this came from Fortune. So if you're in one of these markets that are signaling a potential pullback in prices, you should probably be more careful in making decisions. I say this in every video, and I'm going to say it again now. It is not always a great time to buy a house. In fact, right now, you should be more cautious than ever because of the appreciation that we've seen. We're due for some normalization. We're due for some sideways movement. In fact, we're probably due for some sort of pullback in home prices, which means if you don't have a longer term time horizon, it's probably not a great time to buy. If you're somebody that plans on moving every couple of years, I would probably sit it out and just see what happens. Now, that doesn't mean home prices can't rise. It just means that you're being a little bit more cautious. But if you have that 5, 7 year plus time horizon, I think now is still a good time to become a homeowner for many reasons that I've talked about in the past, but you also need reserves, you need money in the bank, and you can't be stretching yourself. You can't be house poor. You can't go in and have 70 to 80% of your monthly income going towards a house payment. That is never a good idea. So with all of that, let's talk about what I'm seeing as a real estate agent. I have listings on the market at the moment. I'm talking to sellers all the time. There is definitely something in the air with regards to sellers. There are a lot of sellers out there that are panicking, wondering if they've missed the opportunity to take advantage of the market. So you're going to see some more inventory because of that. At the same time, we're still in that spring market. So because of that, inventory is going to come to the market as well. But you're about to enter the slow time in the housing market, or a slower time than the spring market, which is the summer. The summer, things slow down a little bit. This summer is not going to be any different. Kids get out of school. People are on vacations. They're out doing things. They're not necessarily looking for houses. Now, the summer gets the credit because that's when the most homes close escrow. But those homes went under contract right now. April, May, June, March, April, May, whatever. They're just closing during these summer months. So the summer looks like the hot time, but those homes went into escrow a couple of months prior to that. So the summer, you're likely to see inventory continue to build, and it's likely to taper off a little bit towards the end of summer like it normally does. Real estate, there's a seasonality to it. And right now, inventory is increasing. That is part of the season. In addition to that, you've got some sellers panicking, adding their properties to the market. But at the same time, in addition to those sellers panicking, you've got homes on the market that are overpriced. I've personally reduced 2 of my listings' prices in the last week. But at the same time, as soon as I reduced one, I received an offer on one of those properties, and it's likely to go under contracts. And you could have said from the start that that property might have been overpriced to begin with. That's what you have to pay attention to. Just because you're seeing price drops on the market doesn't necessarily mean the entire market is going to go down. Hot pockets, properties that are priced correctly in the highly desirable areas of your market are likely still to get a premium price, likely still to get multiple offers on those properties. So just pay attention, know your market, know what you're looking at. But as you're seeing homes sit on the market longer, you're seeing price reductions, that's a really good opportunity for you as a buyer to potentially take advantage of that situation, right? You might be able to use that to your advantage, especially if a seller is starting to panic. And I've seen it. I've had conversations with sellers who are starting to worry a little bit about the economy, worrying a little bit about house prices, going, I don't know how this can continue. I need to get out. And it's my job to calm them down, for one. But there's a lot of agents out there that don't understand and might be panicking as well. And that could send house prices lower, giving you as a buyer an opportunity. So I do believe the Great Deceleration is coming, and it's already kind of in full effect because I see the overall market slowing down. But I will say again, this in no way signals a housing crash. I do not believe a housing crash is coming, and I will put that on video here so that you can watch it back in the future. I don't see any reason why home prices need to decline significantly. I see them leveling off, which is going to give you as a buyer more opportunities if you want to take advantage of that. But if you're still wondering if now is the best time for you to buy a house, do me a favor, check out this video here. I go over some questions you need to ask yourself. But for now, I appreciate you taking the time to watch. I appreciate the support. Hope to see you again soon. Have a great day. Bye-bye.